And so if you're a fiduciary, you can't even tolerate a 1% failure rate, let alone an 85% failure rate. Hi, my name is Toby Wade. I'm the CEO and co-founder of Deepvest. A little background on myself. I'm an ex-quant on Wall Street with over 20 years experience, both on the buy and sell side. Pretty much have had most of the roles at this juncture, from portfolio management to trading to research. Some notable roles I've had is head of predictive analytics inside of the B of A's research department, on the forefront of using natural language processing for financial markets prediction. And I also led machine learning and data at Gemini, the crypto exchange. Ended up reporting directly to the Winklevoss twins. So it was quite a fun ride there. And then a year and a half ago, we launched Deepvest. What is Deepvest? You can think of it as a financial advisor's agentic chief investment officer that can act in a versatile way where they can do portfolio construction, ask detailed questions about individual stocks. So at this point, we have over 20 investment agents with access to hundreds of investment tools. But the most important thing about this whole thing is that we recently released a research study that shows across all the frontier AI models like ChatGPT, Grok, Claude, Perplexity, across 10 different investment use cases, they get it wrong 85% of the time. And so if you're a fiduciary, you can't even tolerate a 1% failure rate, let alone an 85% failure rate. And so that's where a tool like Deepvest comes in with its agentic investment analysis framework that can go deep and separate what needs to be a deterministic versus a probabilistic calculation. So anything that needs to be pre-vetted is the agent already knows where to go and get it, so that its calculations are done in a reliable manner. And not to mention, we have two other key products. So one is our AI native data terminal, where we're the first out on the market. Bloomberg doesn't even have this, where you can interact and chat with data in an AI native way, leveraging the overall Deepvest engine. And then the third thing is we just released what we call Advisor Labs, which is our new prospecting tool that is allowing advisors at the 7th largest wealth management team to close prospects same day. Once they get the statements, they can close them that same day, and it just takes 10 minutes to run the whole thing and do a complete portfolio vulnerability scan of someone's portfolio.
So obviously, you've been very busy. I mean, you were full when we first met, but very busy since then, it sounds like. So let's kind of backtrack. Instead of jumping into your experience with TFC right away, let's kind of, as James would say, double click on some of those things you were saying. So in your article that I know you shared recently, the term was hallucinate, right? Is that correct?
Yes.
So can you talk about that and just hone in on what that 85% means? Because most people are thinking it's 85% correct, right? So maybe debunk some of that stuff for us, walk through that problem, and then if you can, kind of wiggle in there how you're the solution, right? Kind of blend those two together for me. That'd be great.
Yeah. So to double click more on that 85% failure rate across the those 4 frontier AI models. So a lot of times when we're doing the research, what we found is, first of all, those tools are great at summarization, right? But those tools aren't meant to do math. And so that's kind of like one way you can separate out why that has such a high failure rate. In particular, like if ChatGPT gets a question, and the other thing is they lack the data, and and they have to write the code on the fly. So there's all sorts of issues that starts to go on. So if, I saw it firsthand, and I'm sure you've seen it firsthand. If you ask a question, it'll randomly try to get data from some random website, and then maybe at certain times may write the code on the fly, and then end up wasting 15 minutes, and then nothing happens. So sometimes it was either or Gemini would come back confidently wrong in 10 seconds if he's like, the answer is this, and then the answer is totally wrong, right? And so that's also could be alarming, right? Because it just comes back so confident and you think it's right, but in fact it's wrong, because it's not actually pulling any high quality data or actually doing any of the calculations itself. And so that's where a tool like Deepvest comes in, is that when a question comes in, we provide a complete audit trail where we'll show the data that gets passed in. We show all the calculations that are done. So with each chat users can see that whole audit trail. And so if a question comes in, let's say on what's the maximum drawdown on these 7 stocks? It'll first pull that relevant data from our database and then pass that into code that we've already vetted and pre-written for that maximum drawdown code. So the agent immediately knows where to get the data, where to do the calculation, and then the AI is just sitting on top only to do the summarization layer. So that's how we really control the blending of deterministic tools versus having the AI sit on top.
That's really fascinating. Now, when we think about this space, when you say the 85%, right, is that across like specific to your industry, your niche, or is that generally speaking across all? I don't know if you can kind of maybe speak to that. And then just another kind of going back to that term hallucinate just continues to stay in my mind. So can you tell us what that means too?
Yeah, so it's definitely in our industry, in the investment, wealth management industry. So we took 10 different investment use cases. So things as simple as computing a rolling correlation, or let's pull some fundamental data on some stocks, all the way down to more sophisticated stuff like stress testing a portfolio against macro, or a portfolio optimization. So we did that whole stress test on that. But for sure, like I would be, I would not be surprised if it was a very similar failure rate for other calculation-based industries, if you had to do insurance calculations or anything like that. Hallucination essentially just means it just makes up data, right? It'll say like Gemini, for instance, for maximum drawdown said, for Apple this year, it was 30%. But where I knew I actually did the calculation outside of any system, and I knew it was 15% or whatever that number was. Like I actually knew what the ground truth was. And so that's just like it's just making stuff up, basically hallucination. So
thank you for clarifying that. That's really helpful. Now I want to also, you mentioned, I wrote down here, you said you gave me 3 different things that you've either deployed or about to. So AI data terminal, advisor labs, and I didn't catch the third one. What was the third one there?
So we're calling the third one Agent Labs, which is just really the main Deepvest product itself in terms of that the main chat interface. But that acts as like the foundation for everything else we're building on top of that.
Okay, so let's talk about those products, right? So what went through your head when you guys were developing those things?
Yeah, I mean it's kind of, everything we've developed has definitely been some of it's come from our own experience, but a lot of it's come from hearing what users want, or it's a culmination of just building on top of that for just in general. So we're hyper focused on what users, in our case, users are financial advisors, what they want, and building that out. So if we take Agent Labs, it's really, it truly is a agentic chief investment officer. So it has access to all the CFA level calculations. The advisors can use it to stress test portfolios, analyze portfolios. Right now, so we have some, right now it depends on the workflow for a particular advisor, but some advisors, a lot of times they'll get sold model marketplaces where they have to pay some fee to get access to a model portfolio. Where now we have advisors that don't want to pay the fee. They can just use Deepvest to develop their portfolio from scratch. And so that's like the primary use case, is that they can go deep and iterate different portfolios, stress test them, or if they get questions about certain stocks, they can go deep on all of that stuff. And then for data labs, the next thing you're doing is, when you're doing research, quite often you want to go deep on a certain stock or a certain instrument. So this acts as like, we have hyperlinks with each chat that allows advisors to go deep and like pull up an AI native data terminal, start plotting the price, the historical fundamentals. They can go deep on the earnings transcripts. We have advisors asking, these companies said they were going to adopt AI a year ago in their transcripts. The CEO was talking about that. Did they really do that? And they can go deep and on any of those types of questions. So that's been a very powerful tool. There's calendar, economic calendar, transcripts, calendars, and then the third one is probably the most popular. That actually was requested specifically by one of the top 100 advisors. He wanted a prospecting tool. So if you think about the process right now, a prospect comes, they're already unhappy with their current their current advisor, right? Because if they're unhappy, they're coming to you, right? So they come to you with their statements as an advisor. The advisor has to either do it themselves or send it off to a portfolio team. They may manually extract the positions, try to do some analysis, maybe match it to their model portfolio or do some stuff. It may take 1 or 2 weeks. By that time, the prospect might be gone, right? And so in our case, we can upload that statement, extract all that data, verify that that's actually correct, and then it starts to kick off a whole host of 15 different investment agents. So looking at things like cash drag, how much cash do you have in your portfolio, hidden concentration risk. If you own NVIDIA, what's your true concentration if you also own the ETF or mutual fund? So it breaks down all those hidden risks. It'll actually look at the model portfolio comparison. So it'll compare that person's performance in their current portfolio versus the portfolio that the advisor recommends, and do that comparison, because that's the next sale. Is like, once you identify that someone's unhappy with their portfolio, then they'll bring them up and sell them on why their model portfolio makes sense, right? So there's also, and then we recently launched, I can keep going for ages, but we launched an annuities agent, right? So it'll break. So a lot of times some advisors can get, or some customers can get stuck in a terrible annuities product. So it just breaks down that yield and compares it to a benchmark yield. And so some advisors ask for that, and so are loving that breakdown. But in the end, we get this beautiful PDF that advisor can put their logo on it, their disclaimer. They can edit the PDF, customize it as they want, and then boom, they can send that off to any prospect.
Toby, you got connected with us by Tyrone, who was a TFC founder in Detroit. Talk to us about that connection, what that looked like, and then just your experience from initial conversation through to the event itself. And then, if it rolls through and you want to talk about post-event, however that looks for you, just tell the people kind of what that looked like and what you experienced with it.
Yeah, we're in the same incubator. So yeah, he just said amazing things about his experience, and I think he actually ended up turning money away because he got too many people interested. So I was like, sign me up, But I think that was like a pretty easy decision when you hear that comment, right?
That's hilarious. It's funny when you hear those types of things. It's because that's how I would react too, right? It'd be like, the more money, the better. But then you think, oh yeah, you have these specific guardrails that are up for a reason. But yeah, I remember we met with him doing this series a little while ago, and he was saying how, I think it was Goldstein, he was talking about, he's like, he knows everyone who has a checkbook. Like, it's wild how many connection points, and half the time it's just being in the same room with these people, right, and getting that foot in the door. And it's like, it's who you know a lot of the time, right? So
yeah, it was something I've never done before, so it was a very new experience. And this is kind of coming on the back of pitching actually like a few angel groups, which I actually didn't. It seemed a little noisier at an angel group, because you go in and it's almost like you got like 20 or 50 people maybe that are writing smaller checks that all had to come to a consensus, which just feels like an impossible task with that setup, right? Where it's like very refreshing to kind of know that it's less about a consensus mechanism and just more about someone that could write larger checks, but just if that particular individual investor was truly interested or not, right? And so I think that was just very cool to kind of go through that experience. I was also very impressed with the quality of feedback I got, like immediately after the event. It was like a whole, forget how many pages, like 5 to 10 pages. And a lot of times you hear comments, you're like, oh, I don't know about that, but it was actually like pretty spot on for the most part, most of the comments.
Did you find that the feedback loop, because a lot of what investment's one thing, right? But a lot of what James and us, like, we're trying to push is a lot of the value actually doesn't come monetarily. It comes with, insights and strategic input from people who've been there, right? So just kind of, again, thinking about some of the stuff we've heard from other founders, but any advice that you guys took and ran with right away that made an impact on where you are now? Like, can you just talk about that generally?
Yeah, I think one thing in particular, one of the investors, forgetting her name, but she was at a VC actually. So yeah, she just said one of the reasons another company was taking off is that they really did a great job in the advisor AI space integrating themselves in advisors' workflows, and that's something an advisor needed to do every day. They really integrated into that entire workflow. So I think we really, I really kind of took that to heart. So a lot of the stuff where we've been focusing on is like that proposal thing. That's like an immediate workflow, right? It's like they have to come up with a proposal to like, do the prospecting, right? And so that's like one immediate thing. We also, I didn't get a chance to talk about, but we integrated in with Wealthbox's CRM. So now we get all these client meeting notes from an advisor, so they can start to have personalized chats per client, and also have any meeting notes feed in as context if they have to personalize a portfolio. So if there's maybe someone wants ESG tilts, they can go in and talk about that. But so I think all that, I mean, that was the one major thing that stuck with me. I don't know if that's too micro, but that was just the one. But it has had a big impact on us.
Let's talk about what's in the pipeline. You briefly said some things at the beginning when you were doing your intro, but is there anything new that you can talk about that you'd like to?
One is like a governance layer. So think of it if a CIO can mandate the firm's policies and perhaps restrict the securities that they want their advisors to adhere to. So that's gonna be really exciting to have the CIO mandate, if to put any certain policies in, right? So that's going to be an amazing feature, this governance layer. So we have what we call a schedule lab. So that will be an advisor will be able to go in, write a prompt, and then schedule it to hit at certain cadences if a trigger gets met. So think of it if they're wanting to monitor their portfolio or give them updates. What happened in the last week? Is there any positions in their portfolio they should take a deeper dive look on? So that's going to be another powerful feature. And there's a couple other integration stuff where we're going to integrate in with like custodial portfolio positions, pull all this data in. So it's So I think, and then the last thing is performance reporting. So we're going to start going into that. And eating other people's lunch. So bringing all this together, then it's like this huge snowball effect, right? Where it's like, we'll essentially collapse the entire tool stack for investment analytics tools. I don't know if you've seen that Kitsy's map, but there's like so many fragmented tools that focus on this thing. But essentially what we're doing is going to introduce everything and just collapse it down so an advisor can just sign up for us to get anything investment analytics related.
That's a great piece. I mean, just to be able to consolidate that's overwhelming just to look at. I can't imagine actually going through it. Let's talk about advice to founders. So if we're thinking about just some of the lessons that you've learned along the way from starting Deepvest, let's talk about you in particular, and then we'll just kind of see where that takes the conversation.
Yeah, I mean, I think, what the number one, the number one reason startups fail is because the founders break up or the interpersonal relationships aren't solid enough. So I think having like a good team where everyone's gelling, everyone's on the same page in this, it's kind of like this feels like a magic type moment. That's where we're at with everyone in the team. Just feels like a high agency person, high caliber person that's kind of come together in this serendipitous way. So this is sort of this, magic type feeling. But I mean, that's one advice. I think, I think the other thing I've noticed, we had to let go, one or two folks. And the thing I realized with that is that some folks weren't quite ready for the startup pace or the startup velocity that you need to go lightning fast, right? And fortunately or unfortunately, we're working weekends, nights, early morning, and there's like the lines are totally blurred. We're just like working nonstop. But on the flip side, I'm really enjoying everything. There's no like direct boss telling you, you have to do doing stuff. And so, I think that's been rewarding and from that standpoint. So I would say that's another valuable lesson. That's maybe the last one that is recently top of mind is, half the team I said came from other startups that have literally exited. And I think that's that's like a very great signal, just to know, if you're a first-time founder, being surrounded with someone who actually took it to the last, the finish line, right? And I think that's been, proven to be very valuable. Not to say you couldn't do it without it, but there is like a lot of, there's so many pieces to making this thing work, and we're at where we're at today because of those other folks as well.
Yeah, it's funny, again, referencing James, his article about that messy middle, get talking about AI in general and how a lot of our funders are looking for those who do have an exit strategy. Like, what is the plan? Is it to sell? Is it to, get acquired? Whatever it is. And it's so funny to think about that, or like, it just seems odd to think about. I just started and I'm already thinking about that finish line, but that's what investors want to see. They want to see your long-term plan, and how are you going to meet that? Because at the end of the day, it's going to make all parties, more profitable, and just,
Yeah.
it's just a little bit more strategic, right? So it seems like it's a little bit of an oxymoron, but ends up being a good thing. So all good there. Let's just talk about, so that's general advice to founders on building, right? What they should kind of be thinking about. Let's specifically talk about advice for founders who are considering TFC. Is there anything that you would say to them as they're kind of mulling over, okay, I've been doing all these or whether it's a pitch competition or pitching in general, right? We know you mentioned the part about angels versus doing these like direct,
Yeah.
you're coming out of their own pockets, right? Can you just speak to those founders and give them some advice on their pursuit to come to TFC?
So you get a chance for fantastic feedback from high caliber folks, as well as, larger, I would say on the larger checks, versus angel checks, I guess. So, but not VC level checks, but yeah, somewhere in the middle of the.
Yeah, it's the happy medium for sure.
Yeah.
It's like the not too hot, not too cold, just right. Publicly, what do you want to say to people about Deepvest? What's that kind of call to action that you'd like people to take, whether it be publicly funders, publicly just people who want to, know, or if it's advisors, your target audience? Just kind of speak to that.
Yeah.
And then we can wrap up.
Yeah. So, I mean, come check out Deepvest if you're an advisor and you want a hallucination-free agentic CIO, where you don't have to rely on the co-pilots of the world or ChatGPT to do any investment analysis. We've solved that problem by building out hundreds of deterministic or pre-vetted calculations and doing things in a highly robust way. And we're very excited that we also launched on top of that our AI native data terminal that is allowing advisors to cancel their YCharts subscription, and go deep on, truly go deep in an AI native data terminal versus the traditional SaaS versions of that. Then the last thing is the prospecting tool with our advisor labs. So advisors can close prospects in less than 10 minutes, and the cost of whatever we're charging basically quickly gets offsetted, but with just winning one client or multiple years of paying for us.